Is a woman investor of, I feel like, our decade already. And she and I have been talking for about 7 years since she started.
First interview. We were barely off the ground, and I was so grateful.
Well, you resonated with me, that's for sure, because you have really tapped into so many of the trends that we're talking about today and living. I mean, I live with this thing, for instance. But you know, one of the questions I think we all want to know today is, did you buy the ProShares Bitcoin ETF?
No, we did not.
Okay.
And one of the reasons is we're looking at this very carefully, the futures. There are some tax ramifications we'd like to understand more, having to do with contango, which is what contango versus more normal backwardation.
Right.
So
Not yet.
We're not yet.
All right, so I said that Kathy and I have known each other for 7 years, and we have been talking. When you did come on, I don't even think you had your funds launched yet.
Nope.
You talked with Pim Fox and myself on Bloomberg Radio. So let's go back, because how did you get here? I mean, my gut from just talking to you is that there was no plan to be a celebrity fund manager and someone that we print out a story every day about your comings and goings. So what was your plan?
Well, my plan was...
Because you've been in the financial industry
Yes,
for a long
I've been
time.
in the financial industry, and after the tech and telecom bust, and then even more so after 08, 09, I began to see just incredible risk aversion, career risk, business risk, and everybody was worshiping the almighty index benchmarks. And that was not consistent with what we were doing at all. So we were becoming, I describe it as an otter duck,
yeah.
You know? And I also felt this was very bad behavior. I feel like maybe investing in tried and true is not wrong, but investing only in the past, I do believe is wrong, you know, because there are so many. So there is so much in the way of innovation evolving,
right.
And I did not feel like it could be funded appropriately in the public markets. The private markets were screaming, so valuations were crazy there. The same kind of stock was selling for a fraction of the valuation in the public markets.
Right.
And so I felt there was an arbitrage opportunity. Many people in the public world said, "Oh, those private valuations, those are going to crash." We didn't think that was true. We thought the public market valuations were going to move up. So I felt that this focus on innovation had been lost, research lost,
right.
Investing lost in the public markets. And I said, we could fulfill a huge unmet need and change this misallocation of capital, which is all about the past, especially because of the explosive growth opportunities there are in the future.
So tell us about, and I know there's been a podcast you've done and there's been some writing, what was the aha moment that you said, I'm going to do this differently? And I want you, if you don't mind, I mean, I know your faith is important to you, and the name of your company is ARC. So how did that play into it?
Sure. So I remember walking into my home on a beautiful I get these epiphanies on beautiful sunny days when I'm not really thinking about anything. But I walked into my home, beautiful sunny day, silence. Now, I had 3 children, 2 dogs, and a nanny, and it was complete silence because they were going to all be away for 2 weeks. First time ever in this house. And I walked into the kitchen, and I wasn't happy, but I wasn't sad. It was just like, whoa, this hasn't happened to me before. And boom, I wasn't even thinking about work. And I got the message loud and clear. You have to take all of the technologies that have disrupted other industries and start to disrupt your own and focus on the new creation.
It sounds like, and I want to stay here for a moment, I have faiths and beliefs that are very important to me. It sounds like your faith guides you in a lot of ways. How does it, as you look at these companies, make your investments, make your decisions? How does that play into it, Kathy?
Well, first of all, in terms of that aha moment, you know, many people would describe that as the force or the universe. I would call it the Holy Spirit. And so the Holy Spirit as a guide, you know, as much as we in the financial world would like to think we're in control, we're not. There are much bigger forces in control.
Some would say the Fed's in control right now a little bit.
No, not even the Fed's in control. So, and this idea of the new creation. In fact, it was after I described what the ecosystem that I wanted to put in place involving social media and giving our research away. And, you know, I wasn't even thinking about going viral in the way that we have gone viral. I was just thinking, how can we get our message out? Because we can't get it out through traditional channels. Right. Nobody believes in us.
Well, if you're going to do it differently, like you're going to do it differently all the way.
All the way, all the way. And so I've forgotten your question. What was the last bit of it?
What was my last part of the question? I forgot too. I was like caught up with you. Well, what's interesting is, you know, I'm curious about, I was talking about, you know, how your faith has guided you in terms of the specific investments that you make, whether it's a Tesla, whether it's Bitcoin, whether it's, you know, a biopharma company.
Right. So we are seeking the truth as these new technologies evolve, all of them at the same time, and cause like a lot of chaos, a lot of confusion, a lot of FUD, fear, uncertainty, and doubt in our markets. And we're trying to allocate capital to its highest and best use, do the right thing.
How hard was it in the early days? And you essentially bootstrapped it, what, for 3 years?
Yes.
And you had people working at home, right?
No, we all worked in an office.
Oh, you all worked in an office,
We worked in an office, yes.
But how hard was it?
That was a very important part of coming together. The bonds that we created during that time will never leave us. So how was it in the early days? We were on a mission. And you know, I never thought we were going to fail. Many other people thought we were going to fail.
Right.
I remember Eric Balchunas is very kind in the beginning. He's very kind and says
Bloomberg follows
at
ETFs.
Bloomberg he's I think your top ETF journalist, and he really thought we were destined for failure, and basically told me so in a very nice way, but I just didn't believe that. And one of the reasons people thought we were going to fail is here we chose a wrapper that was dominated by passive portfolios and put an active strategy in there, and people thought that was crazy. Now, after 2.5 years of no traction, effectively, I began to say, "Wow, was that a bad move?" And so we started doing separately managed accounts and so forth. But it turns out that was a great decision because so many people thought it was such an awful decision.
Right.
We had so much visibility that when we started to gain traction, when the inflows started, it was like a head fake, and you know, it got us so much more attention than we would have gotten otherwise.
I mean, what were institutional investors saying to you in the early days when you made your pitch?
Too volatile. That was the pitch. I mean, that was the response. Too volatile. We couldn't possibly do that. And here we are. We are a volatile strategy.
Right.
And our response was, well, volatility on the upside is not a bad thing.
Right.
And last year was a good example of that. But the
Off
other
the
thing,
charts.
But the other thing we said at the time, and we actually took our cues from a value investor who said to us, "I would never buy one stock in your portfolio, but I like your research and you might be right, so I'm going to just put 5%. This is a value investor, 5% as a hedge." And as did our first institutional investor, which is value-oriented,
right.
And kind of thought we were behaving like a value manager, long-term time horizon, and looking for extreme values. Well, value investors are using price to book and dividend yield and that sort of thing. We're using growth. You know, we're using spectacular growth rates that no one is expecting. And Tesla was our first proof of concept, I would say, a very visible one, where people were saying, what are they talking about? And all we had done was used Wright's Law, which is the centerpiece of our research, to try and figure out how quickly costs would decline in battery pack systems, and therefore how much prices would fall for electric vehicles and how quickly the uptake would be. And we saw Elon Musk, magnificent things happening in terms of
But it wasn't
cost.
so easy to be invested in Tesla early on.
For us, it was easy.
Because you just believe the story, or?
The most important call that we made initially with Tesla was, all right, Tesla's battery technology is unlike any other auto manufacturer's battery technology. Tesla was riding down the cost curve of the consumer electronics industry. So laptops, cell phones, huge volumes, right? And when you get a scaling like that, costs come down. It's called a learning curve in the tech industry. So Elon, you had auto manufacturers and auto analysts laughing at him. Elon is building his car on top of cell phone batteries. Isn't that funny? And what they didn't believe was that the engineering was possible.
Right.
So there was it wasn't, they just didn't think it was possible. And he did. And so even today, these cylindrical batteries that he's been using relative to lithium-ion pouch, lower cost and will remain lower cost for at least 3 years, we think, which means that any other auto manufacturer who wants the same performance and the same range at the same price will have to lose money on every car sold.
So it keeps him in a really great position.
And that's
what
only
you're
one
saying.
of 4 barriers
One of
to
4.
entry.
Well,
But that was the first call we had to make.
so Elon Musk and Tesla. So there is a point that you would get out. I know there's a story you've talked about. You put a mark on the stock price. I think it was 3,000?
Yeah, 3,000 is our base case, not our bull case, but our base case.
Okay, so there is a point where you could say, okay, I'm moving on. You've gotten out of Apple. I mean, these are backward-looking companies or technologies that you don't think are, or not necessarily?
Not necessarily. They are very well understood. Their dynamics are well understood. They are the FANGs.
Right.
They're well owned. And we just want our clients to be exposed to the next FANGs, which are not going to be in the FANG category, but the next FANGs.